How do you adapt and adjust to Q2?
Yeah, well, thanks, Tom. Yeah, I think that the Q2 is going to be the actual reopening, right? So the dream of reopening, the dream of restarting the economy is always, bullish. And it's because there's no prove it moment. Now, as we actually reopen the economy, we're going to have to do it. And execution risk goes up. So that's not the end of the bull market. It's not a disaster. But at the stock level, we're expecting disappointment. I mean, we think it's going to be difficult for a lot of companies to manage this. And oh, by the way, some companies are going to take advantage of it, take share, and will operate quite well. So one of our recent calls is, we did downgrade small caps. It's had a heck of a run, and it's kind of a lower quality area. And we're basically recommending that people do upgrade the portfolio a bit on the quality side as we go through this reopening period in Q2 and Q3.
Is it fair to say you think this is a sell the news event, Mike?
Well, I don't think it's a sell the news in terms of, equities over bonds in that regard. I think it's more of a let's just get out of the low quality part of the trade has really worked. As you know, John, we've been bullish from the lows on the idea that's what always happens, and low quality does really well coming off a recession. We looked at that data recently, and the relative outperformance of low quality over higher quality and some other things we can talk about has been extraordinary. Small caps over large, for example. And we just want to capture that because this is the time of the recovery in any cycle where you revert back, you have a little consolidation, and quality actually becomes more in favor again, at least temporarily.